Welcome to Yahoo Finance Live. I'm Julie Hyman, along with Josh Lipton here at the New York Stock Exchange. Let's get you caught up on the big three stories to watch as of 3 p.m. Amazon is the big one with the bullet here. Amazon hit with its first federal lawsuit, the Federal Trade Commission filing its long-awaited suit against the tech giant, along with 17 states. They're accusing the company of using, quote, monopoly power to keep prices artificially high, lock sellers into its platform, and hurt its rivals. It's the latest move from the government to take on big tech. Meta, Alphabet, and Microsoft, they are all now facing antitrust challenges.
And President Biden making history as the first sitting president to walk a picket line. Biden visiting striking auto workers in Michigan. On day 12 of this strike, he called on the union to stick with it as he tries to maintain support of big labor heading into the 2024 election. While UAW President Shawn Fain joined Biden, he stopped short of issuing an endorsement.
And the shutdown showdown on Capitol Hill, again, heating up. House Speaker Kevin McCarthy trying to reach a consensus within his fractured party ahead of scheduled votes tonight. And it comes as the Senate gears up for a vote on a bill that could serve as a vehicle for a continuing resolution.
Now let's take a quick look here at all three major indexes and see how we're faring. You can see red across your screen right now. The Dow's down about 1.2%. S&P 500 down about 1.5%, breaking below that 4,300 level. All sectors, by the way, in the red right now. And that tech-heavy Nasdaq down about 1.6%. Meanwhile, the yield on your benchmark 10-year, that is at 4.562%. So investors trying to judge how the economy reacts in response to these rising rates and where, against that backdrop, they need to be putting money, Julie.
And today, they're not putting it in stocks.
No.
Amazon is facing a set of antitrust charges from the Federal Trade Commission. The FTC and 17 state attorneys general suing the online retail giant, alleging Amazon is using anti-competitive business practices. Here with the legal breakdown and what this means for the future of the company, we have Yahoo Finance's Alexis Keenan and Dan Halley. Alexis, let's start with you and the exact content here of the government charges against Amazon.
Sure. So the FTC and these 17 states, they're going after Amazon.com. So the retail giant that we all know and is uberly popular. So they're saying that the company is operating an illegal monopoly in two different markets, and the two markets that they name, and this is going to be a hurdle for the FTC to prove up these markets. One is the online superstore market. That's what they call it. This is where the customers come to shop. And also the online marketplace services market. That's where the sellers go to list and sell their products. So what the government wants out of this, the governments, is an injunction. They're asking a judge for an injunction. So they're not looking to break up the company. They're saying that we want to stop what they call interlocking anti-competitive strategies by Amazon that's harming both consumers, they say, as well as sellers. And here are 5 different practices. This is at the heart of the complaint. This is what they say are the illegal activities by Amazon. 1, they say the company buries products that are offered elsewhere online at lower prices. 2nd, they say that the company replaces relevant search results for products with advertisements. Next, they say that the company biases search results to favor their own brand products on the superstore. And they also say that they condition seller prime eligibility. So, right, the ability for a seller to get that product to you under prime conditions, those generally 2 days. They say that that's conditioned on the seller also signing up for Amazon's fulfillment services for packing and shipping the product. And finally, they allege that the company is charging unfair seller item as well as advertising fees that are racking up to as much as sometimes 50% of a seller's revenue for a particular sale. So in response to all of this, the company is saying through their general counsel, David Zaplowski, he says that a win for the FTC here would mean reduced choice, higher prices, slower delivery. He says the practices that the FTC is challenging have helped to spur competition and innovation across the retail industry and have produced greater selection, lower prices, and faster delivery speeds for Amazon customers, and also greater opportunity for the businesses that sell on its store. So, of course, Amazon being the centerpiece of FTC Chair Lina Khan's Yale Law School Law Journal article that has become widely known. It's called the Amazon Antitrust Paradox. And at the heart of that, she alleges that the modern antitrust laws aren't designed well enough in order to handle violations in the big tech industry because they're just too focused on price. Guys?
So, Alexis, thank you for that. And switching to you, Dan, what is it going to look like for Amazon if the company has to change its practices that the FTC is claiming to be anti-competitive here?
Yeah, it really depends, right? If they do end up getting everything they want, the FTC that is, which, as Alexis said, could be a long shot, we could see big changes to the way the company operates its Prime service because it wouldn't be able to necessarily charge the vendors that sell on its site as they do. Maybe they'll have to pull back on the offerings through Prime, whether that's the same day or next day delivery, whether that's including things like video and music in the Prime service. They specifically take aim at the fact that Amazon requires requires sellers to use its fulfillment services to be a part of Prime. And so this could really kind of lead into some longer term issues for Amazon and its overall business. And so we really don't know necessarily how it's going to shake out at this point. But if it does have to rewrite the rules of some of its Prime offering, that's a big deal. They rely on Prime for a good deal of revenue, and it gets consumers to continually come back to Amazon to make purchases. The other thing is the idea that they preference their own goods compared to those of sellers on their site. Well, that could mean that we'll see a drop in Amazon products being sold. I've personally been using Prime to purchase different, things like wires and whatnot that are relatively inexpensive. And I would previously see Amazon stuff pop up first. Now I'm seeing less of that. I'm seeing them show up further down the line. So it could be that Amazon's making changes already in the background or did in preparation of this suit. I can't say for sure, but that's just my anecdotal experience. But yeah, we could end up having to see some big changes to its marquee service.
Yeah, maybe some preemptive moves on their part. Alexis, just quickly here, what can we expect now in terms of a timeline now that this suit has been filed?
Yeah, so first off, there's a lot of redactions in this complaint. And so we're not really getting to see all of what backs up these arguments. And Amazon has 14 days in order to go in and justify to the judge why these parts of the complaint should remain under seal. So that's the first step. Then they'll have an opportunity to file an official response. But look, this type of lawsuit, because it's dealing with these nascent markets, right? None of these courts have ever considered whether there's a monopoly in the superstore market or the market for marketplace services market. So that's really the first step, and it could take well over a year for this all to shake out, because the very first steps in this litigation will be Amazon trying to, or the FTC rather, trying to prove that these markets actually exist in the first place, and then on top of it, that there are monopolistic illegal violations going on.
Team coverage from our Alexis Keenan and Dan Halley. Thanks so much, guys.
The antitrust lawsuit against Amazon by the Federal Trade Commission in 17 states comes as the agency has seen a string of losses in court attempting to crack down on big tech companies. Joining us now is former FTC Commissioner Mozelle Thompson. So, Mozelle, let me just start with your reaction to the news. How strong, Mozelle, do you think the FTC's case is?
Well, I think that they're pushing the boundaries, and they're trying to make some new law here. But I also think that they have two goals. One is to change the law as it currently stands, but the other thing is to condition the market to think a little differently. I think that they are designed to provide a little bit of a chilling effect to large companies, and to that someone will be policing their actions. I think that's very important. This case has a lot of novel ideas, and I think some on the law and some on the facts. In either case, it's going to take a while for them to sift through it.
Moselle, it's Julie here. What's interesting about this case is most antitrust cases like this have to prove that the consumer is being disadvantaged by having to pay higher prices. In this case, the government seems to be arguing it's sort of indirectly causing those higher prices on other sites because of the burdens put on the sellers on Amazon, if I'm understanding it correctly. So when you talk about sort of the novel way they're approaching it, that seems to be what they're doing. Is the traditional way of measuring things just by price, is that outdated, do you think? Does that need to be changed?
Well, I think that the current FTC would probably argue that it is. But one of the things that will happen here when you start looking at the facts of the case is that you're going to have two different competing interests here. One is some real tangible consumer benefit versus some hypothetical consumer benefit in the future. That's going to be an interesting thing for the judge to sift out. And that in and of itself, in many cases, when you have an antitrust case, you don't necessarily, the actual consumer benefit may be small. But in this case, the Amazon Prime is extremely popular and it's also provided a lot of benefits to not only consumers, the businesses. So consumers actually have a view here. And so it's going to be an interesting thing to see. There are strong defenses. And I think the what was outlined earlier, part of it is going to be on the law early on, is to try to say these are two markets and that they're distinct markets that are cognizable under the antitrust law. That's going to be an interesting challenge. Then after that, you get into the facts. And then you also have 17 states who have their own interests.
And Moselle, my understanding as well is you have to define, correct me if I'm wrong here, you have to define what the marketplace is. So is it the broad retail industry, or is it going to be defined as something much more limited and narrow, online retail?
Well, I think that's an interesting question. I'm sure that Amazon is going to argue that the retail space is much broader, and that's different than it may have been years ago. But what they could also argue is that even in the online retail space, there's a lot of competition. Amazon is there, Walmart.com is there. Everybody who is a big retailer has some sort of retail online presence. So it may not be as narrow as the FTC would like to define it.
Moselle, you were with the FTC, of course, and you also have done consulting for corporations as well. And I'm curious about something that you said earlier about this sort of putting a chilling effect on some companies. We just heard Dan talking anecdotally about changes he's seen on Amazon. What effect is not just this lawsuit, but all of the government actions that we're seeing on big tech, what effect is that having on how big tech is behaving? Are they taking preemptive and defensive measures?
I think they are. I think they're looking closely at the antitrust laws, but they're also recognizing that they may not be able to achieve a settlement if there is some sort of problem with the FTC or DOJ. And in fact, they may have to go to court in order to get a resolution. That sort of raises the bar a bit. What it also may do is raise the cost to consumers. So I think that we have to think about what that means in an overall fashion. You're right to point out that the FTC so far has not had a great track record on convincing courts that their view of where the law should go is exactly where the courts want it to go. And so that's going to be an interesting challenge going forward. The chilling effect means that companies are going to have to be a little bit more strategic in thinking about what their practices are and how they're defending them.
And Moselle, we also do have this race for the White House. I'm just curious, if there was a change in administration, if you saw new FTC leadership, what could be the impact on this case, Moselle? Could you see new FTC leadership? Could they pull this complaint? Would you expect that? Or regardless of who's in the White House, now that this has been filed, it's going to continue?
I think any new administration and new leadership can make choices about the emphasis they want to put on their enforcement actions going forward. I can't predict what that's going to be, but it's possible that they may take a different view of markets and how they want to condition the markets. In other words, part of what the FTC or any enforcement agency does is not only the actions they bring, but the signals they send to the marketplace. They may want to send different signals. That's possible. I also think that what you have here is, don't forget, in this particular case, the investigation was started before this administration came in. And so some of the investigation and the details and the facts that have been developed has stemmed over a long period of time.
Interesting. Moselle, thank you so much. That was really helpful. We appreciate it. That was former FTC Commissioner Moselle Thompson. Thank you. And we are just getting started here on Yahoo Finance Live. Coming up, rising theft is taking some big hits to retailers' losses. We'll tell you how Target is taking action against the surge in retail crime at its stores. And Costco set to report its earnings after the bell. We'll bring you those results as soon as we have them. Don't go anywhere.
Good morning. This is Yahoo Finance.
Big news, 3 things that you need to know.
We just got the announcement.
What happens now?
I got a question.
What does success look like?
What was one of the biggest challenges that you faced?
How much does that raise the odds for a recession?
This phase is over. Tell me what happens to the debt ceiling.
Where does generative AI, though, fit into your portfolio?
Talk to us about this diversification and what investors need to know.
And I think it's important. This is the stuff that gets me out of bed, fired up.
What's the gateway? What's the new bridge to opportunity?
Doesn't matter if it's a soft landing or a hard landing.
Big interview. I can't wait.
Supreme Court out with the ruling on President Biden's student debt cancellation.
Right, let's turn now to some recent tech earnings. And they give you information if you watch them closely.
President Bostic, President Investor Gary Gensler, thank you so much.
Part of what Davos is about is sharing best practices, coming forward with ideas, and then enabling those ideas into action.
And I would add that there's more to come on this. and we keep producing products that help people lead healthier lives.
This is one of those rooms they use to simulate light in space.
Interest rates will come down again.
Figure out where your money is going now. You got to scope that out.
And the numbers really tell the story.
What does all this mean for you?
Keep it tuned into Yahoo Finance.
Well, we got to check the markets now, sponsored by Tasty Trade, and especially we got to check the markets today because we are seeing a significant sell-off as really the September doldrums that we see seasonally has really taken hold. And then some. The Dow right now down 426 points, about 1.25%. The S&P off more than 1.5%. The Nasdaq down 1 2/3%. And with this downturn in stocks, unsurprisingly, we are seeing an upturn in the VIX, the volatility index that measures the volatility of the S&P 500, creeping up back to 19 today. So that indicates an elevated level of volatility, again, reflecting the selling pressure that we are seeing within the stock market today. Wanted to take you inside the Yahoo Finance Interactive as well for some of what we're watching, because part of the impetus, sort of the driving force behind the sell-off we're seeing in stocks is what is going on with yields today. As we talked about earlier, 4.56% on the 10-year yield. We haven't seen a level like that going back until 2007. So obviously it's been quite a while. That's putting pressure on stocks in all kinds of different ways. If you look at the sectors that are under pressure today, recently we have seen tech under pressure, but now we are seeing the sort of traditional interest rate sensitive groups that are joining in. Talking about utilities here, which have relatively high debt loads. They also have high dividends. So they sort of compete with treasuries as an asset class to some extent. So the XLU there down 3%. Real estate also falls into that category. It's down 2%. And the XLK, which is tech, information technology, down 2% as well. So everything's down, but those are the groups that are leading the declines today. Let's talk about one stock in particular that is declining. That's Amazon. It's down 4.25% after the Federal Trade Commission and 17 state attorneys general sued the company, alleging that its dominant online retail store, Amazon.com, is illegally monopolizing two markets. Now investors want to know, is it the time to buy Amazon shares or stay away? Joining us to discuss is James Demmert. He's Main Street Research Chief Investment Officer. James, thanks for being here. How should we as investors be thinking about this regulatory action on the part of the government, and how worried should investors be?
You know, I think these kind of government regulations, any federal regulatory company institution coming into a company like this, it always is going to cause some concern for investors. In the case of Amazon, you know, we think investors should take the weakness in the stock as a window of opportunity. This is not certainly the first time we've seen regulators go after what they would call a monopoly in a company like Amazon. As a 3-century investor, decade investor myself, I remember Walmart having regulators going after them in the 80s. And I think this is just sort of part and parcel of the capitalism in the world that we live in. When companies start to dominate, there's always a concern by the regulators that, you know, it's becoming monopolistic. We don't think the FTC is going to get very far with this. And I think investors should remember these types of attacks, if you will, by the U.S. government on any kind of company, these take months, if not years, to resolve themselves. And, you know, we think Amazon is healthy. We love the way they responded to the FTC. And so we're on the side of Amazon, and we would suggest investors on the weakness in this stock and also the weakness of this market use this as a window of opportunity to acquire shares.
And James, I want to pull back the lens on that point right now, because as Julie mentioned, we got red everywhere today. All three major indexes are declining. The S&P 500, I'm looking here, we dipped below 4,300. In the near to intermediate term here, James, what is your outlook for the market?
Thank you for that question. You've got here what I would consider to be a very overdue correction across the board in stocks, and something that we believe has been way overdue and is another opportunity. It's a very different pullback than what we've seen for the last, let's say, 18 months of the bear market. Every other pullback, or what we call a correction, and I think this one still is in the confines of that, it's been less than 10%. The past ones have been sort of in a world where the Fed had a lot of work to do, and inflation was a lot higher, 5, 6, 8%. And I think investors here should look at this as maybe the last window of opportunity, that last pullback before we start what we would consider a new business cycle and a new bull market. So this is a correction that's coming down where inflation is at 3 or 3.5. The Fed just wants to have a 2 in front of it, and I think they're going to be happy with that. So we've gotten the Fed out of the way mostly. I know they said they may need to raise rates one more time, but let's all keep in mind the bond market's done most of that work in the last 2 weeks. So that's why equities have sold off even further. And again, we would use this opportunity with the VIX up. Market very oversold at this point. Investors should start acquiring stock, increasing their stock exposure for what we think is going to be an amazing fourth quarter rally and into 2024.
Well, and I'm curious, what will be the impetus for that rally, James, right? Because usually stuff doesn't just turn around just because it's sold off too much. There's usually some kind of spark, if you will. What are the candidates for that spark?
Yeah, that's a great question because we do need some sort of catalyst of some sort, and I think it's right in front of us. It's coming front and center in the first week of October and throughout that month, which is the earnings season. And we've seen what's interesting to us, this crazy, dramatic increase in interest rates by the Fed over a year. The economies continue to be resilient, and so have corporate profits. So I think when investors recognize that, corporate profits are coming in as well or better than expected. I know the bar has been lowered. I think what's going to happen is you're going to see investors gravitate back to stocks. And let's keep in mind, most of the market's trading at PEs less than 15. So, other than the AI Magnificent Seven, this market really hasn't lifted off yet. So we think with the Fed out of the way, rates pretty much peaked. And you've got an elevated VIX, so you've got a little bit more concern. It's a great setup going into earnings season, which really kicks off investors saying, well, you know what? Stocks are cheaper than they were. The earnings are solid. I need to become more invested.
Yeah, just to play devil's advocate a little bit, to your point, companies always beat estimates, right? Like, that's the game. We know the game. At the same time, we are going into an earnings season that's likely to see the fourth consecutive year-over-year decline in earnings. It's a smaller decline, right? It's been getting smaller as the year has been going on. But, you have to wonder about not just how earnings are going in the rearview mirror, but the effect of all these cumulative interest rate increases and some of the other headwinds that we're seeing, whether it's student loan repayment, whether it's the government shutdown, right? All this stuff, is that going to weigh on outlooks that we're going to be hearing from companies?
The outlooks are important, and I do think that you bring up some good points here. Investors have to be very selective in this market. They have had to be all along, but even more as we go into what we call the new business cycle, new bull market. I think you've got to be very selective about companies that are able to generate profitability, have very strong balance sheets, and sort of have those quality characteristics. So we really try to buy companies where earnings are increasing, not declining, where price earnings ratios are reasonable relative to their growth rate. And I would suggest this, you brought up some really good points. You've got the, Washington potentially shutting down. You've got a lot of concerns out there in addition to strike. One of the things that's different now, and I'm not saying this is going to happen in the fourth quarter, but the Fed is sort of running the risk here of going further and pushing us into a recession, or if we see earnings really come apart. What we didn't have through most of this last year is the possibility that the Fed could lower rates if we get into economic trouble. So I think investors should be careful what stocks they own or buy, make sure they're profitable, use stop losses to mitigate risk, and keep in mind, we're at the tail end of this campaign to raise rates, and stocks are at good valuations. If the economy does tip further and earnings really start to fall apart, I think here you're going to see the Fed put come into play, and the Fed's going to come to the rescue. Our feeling is that's not going to happen, but they might lower in 2024. We think the fourth quarter, the earnings will be good enough.
All right. Stay tuned then. James Demmer, thanks so much. James, Main Street Research Chief Investment Officer. Appreciate it.
And Target is taking action in response to retail theft by announcing plans to close 9 stores. Yahoo Finance's Brooke DePalma is here with the details. Brooke.
Good afternoon, Josh. That's right. Just in from Target, they announced plans to close 9 locations, saying that they cannot continue operating these stores because theft and organized retail crime are threatening the safety of its team and its guests and contributing to what they said was unsustainable business performance. Now, prior to this decision to close those 9 stores, the company said that they did take meaningful steps to invest in theft deterrent tools. But despite those efforts, fundamental challenges to operate those stores safely and successfully was not possible. Now, those stores, as you just saw, includes 1 in Harlem, New York, 2 in Seattle, Washington, 3 in San Francisco and Oakland, California market, and 3 in Portland, Oregon. Now, all of the team members that are going to be impacted by these closures will be offered an opportunity to transfer to another Target location. But in addition to shuttering those 9 stores, the company is also taking the efforts that you could see right here. That includes payroll investments to add more security team members, third-party guard services, as well as add even more theft deterrent tools across stores, and in some stores that even goes as far as implementing tools like locked cases for merchandise that they said is prone to theft. And lastly, the company is also investing time and resources in order to help better prepare its store leaders and security team members so they can better help themselves and de-escalate potential safety issues when hit by this organized crime. And as you can see here, these are pictures that I took over the weekend when I noticed that locked cases were now up at my local Target. And, you know, these are really items when you think of toiletries, higher priced detergents. And one expert that I spoke to said they often are locking up items that they said can be offered for a high resale value or a quick resale opportunity. And so really, when you think about the scope of this, we know that in the latest quarter from Target, they said that this is going to impact this year by cutting profits of up to $500 million. We know that last year, theft shrinkage, inventory shrinkage also hit profits by roughly $700 million. And so this continues to be an issue. And this is just one of the latest retailers to take a stand when it comes to retail theft.
This is such interesting stuff, Brooke. And of course, we've all encountered these types of cases, not just at Target, but at a lot of different retailers, because this is a bigger issue than Target. The National Retail Federation just out with some new data on this very issue. What can you tell us? What do we learn from the NRF?
Yeah, when I spoke to the National Retail Federation, they said that really in the past few years, this problem has only picked up. We now know that in 2022, this was a $112 billion problem. Let me say that again, $112 billion. And that's up 20% from the previous 2021 year when retail shrink accounted for $93.9 billion in losses. Now that new number that we have out today, that $112 billion number, about 67% of that is attributed to solely theft. And, you know, as I was speaking to experts at the National Retail Federation, what they were saying that we're only on the brink of understanding the full scope of the retail theft issue. When you think about, you know, how much is evolving, how much change is happening, and how ultimately smart these organized retail thefts are getting. He said that people are ultimately targeting the East Coast, saying that they're even going as far from traveling from West Coast to East Coast to target higher ticket items and then ultimately sending them, or rather reselling items to third parties, like even small mom and pops and bodegas that may not even be aware of where these sellers got this inventory from. We'll continue to watch it, Julie, for sure.
Brooke DePalma, thank you so much. We appreciate it. And coming up, President Joe Biden joining the picket lines in Michigan. We'll recap some of the biggest takeaways from his time on the picket line next. President Joe Biden has made history today, joining the striking auto workers in the UAW dispute now in its 12th day. It is the first time ever a sitting U.S. president has joined a picket line in modern times. Here's what he had to say from Wayne County, Michigan.
Heard me say it many times. Wall Street didn't build the country. The middle class built the country. Unions built the middle class. That's a fact. So let's keep going. You deserve what you've earned, and you've earned a hell of a lot more than you're getting paid now. Thank you very much.
Let's bring in Yahoo Finance reporter Praz Subramanian. Praz.
How's it going, Josh? Yeah, so kind of a big momentous day there, really, for the UAW to have a sitting president, the first ever to join the picket line there, like you said, in Wayne County, Michigan. This is at GM's Van Buren Township Parts Distribution Center, which is, one of the locations of the stand-up strike there for the UAW. Like I said, Biden telling the union members, as you heard just now, you've earned a hell of a lot more than you're getting paid. Also telling them that they saved the auto industry back in 2008. And finally, when being asked whether the workers deserved a 40% pay hike, he said yes. So again, a pretty powerful scene here with the president, joining several dozen auto workers outside, shaking hands, even hugging some of them. Biden said it wasn't the first time he's been on a picket line. He's done it before as a senator. And then kind of most importantly here for Biden, solidifying his bona fides there with the union and also the working class ahead of Trump's visit, which is tomorrow.
Yeah, definitely some classic lines there from Biden in terms of supporting the middle class. But all of this happening as Ford, which of course is one of the big three automakers affected by the strike, has announced a big update on an upcoming battery plan. And then we also heard commentary on that update from Shawn Fain.
Yeah, so, Ford sort of out of the blue here, talking about how they're pausing development of this battery plant in Michigan. Now, they announced this plan a few months ago with much fanfare. It's going to be a deal with China's CATL, where they're licensing CATL's LFP battery technology. Now, Ford says this plant is going to be owned by them, using union workers, their workers. It's not going to be a Chinese-owned sort of operation, but maybe there was concern that potentially they might have gotten guidance that perhaps they weren't going to get the battery credits that they were looking for in building this plant in Michigan because of the Chinese connection. But the UAW quickly kind of pounced on this. Shawn Fain sort of saying in a statement, quote, "This is a shameful, barely veiled threat by Ford to cut jobs, and now they want to threaten us with closing plants that aren't even open yet. We're simply asking for a just transition to EVs, and Ford is instead doubling down on the race to bottom." So the UAW is seeing this not just as a sort of weird kind of situation where they want the Ford is looking for a way to get more EV battery credits. They see it as a potential way to put the screws to them and close a plant that's not even open yet, as a way to tell the union, hey, bring down your demands because we can't afford them.
All right, Praz, thank you so much for the update. We appreciate it.
Thanks, Josh.
Well, the rising rate environment taking a toll on the broader market, of course, as we've been noting today, but also raising concerns about the state of fintech specifically. Companies could be getting squeezed on two fronts because of the slowing economy on the consumer side and also potentially margin pressures and higher borrowing rates. Joining us now, Michael Linford, Chief Financial Officer of Affirm. Michael, it's good to see you again. Thanks so much for joining us. We've been talking about all the different ways that higher rates are affecting consumers and companies. Obviously, you guys, as effectively lenders, are affected by this as well. Talk to me about how, and I know this is a subject that you guys have been talking a lot about lately. Just kind of summarize for us how you guys are attacking the higher rate issue.
Yeah, well, thanks for having me. Affirm's product, everything that we do, is more valuable in a high rate environment. I think the past 18 months has been one of extreme volatility, where you saw not just a higher rate environment, which is what we're in now, but a rising rate environment with the most quick rise in rates that we've seen in decades. And that impact is behind us. So much of what we've been working on at Affirm is retooling our business to operate in this higher rate environment. We feel really good about that. The last quarter's results demonstrated our ability to deliver really strong unit economics, good margins for Affirm, despite being in that higher rate environment. And we're kind of excited to see how this plays out in the next several quarters. The recent execution we did in the ABS market is another great proof point of the high rate environment and strong investor demand for our asset despite the rate environment.
And Michael, how does, in this environment, one question I know investors are asking, the street's asking, is how does a firm get to GAAP profitability in this environment with higher rates? How much of a challenge is that?
Yeah. So we just posted our first quarter of adjusted operating income profitability last quarter, and we gave guidance that we would continue to do so. I'm really proud of that milestone. What that means is that a firm is beginning to print a P&L that is profitable on an adjusted basis. GAAP profitability is around the corner. That has to deal with a lot of non-cash items located in stock-based compensation, some warrant expense. Those will take a few years to roll out and work through. But we point investors to looking at adjusted operating income as a really good indicator, as a waypoint to showing real leverage in the business. And the leverage we showed last quarter is really strong. We're able to really scale the network because at the core of what we do is we're a software business that's tackling a fintech problem. And software businesses show a lot of leverage, and last quarter that was on display. I think we're going to continue to show that in the quarters to come.
Michael, your stock peaked in the sort of go-go days of late 2021, above $165 a share. And the stock has more than doubled this year, but it's still below 20, or call it around $20 a share. Do you think that the street is understanding your case appropriately and valuing you appropriately right now?
We focus as a management team on running the business and building the best possible network, helping our consumers get the things they want and need with an honest financial product. We don't spend a lot of time worrying about where the market is right now. We think given the thrash that's out there right now, it's going to take a little bit of time for things to settle out. And we're not really concerned with that. We're focused on building the best business possible, and the markets will do what they need to do.
And Michael, I got to ask you about this Bloomberg headline. This question was coming, where they report that you're exploring a subscription service to create more recurring revenue. Any comment on that report, Michael?
No comment. We're always exploring, iterating new products. I do applaud the aggressiveness of reporters looking at scraping code and the like to try to figure out what's up next for our firm. But I would caution everybody not to look too much into those things, as the genius of Max Levchin will keep iterating and building new products, some of which will never see the light of day.
Michael, to use a firm sort of as a lens into how the consumer is doing right now, what can you tell us from the data that you're seeing, whether it's delinquencies, whether it's demand coming in from consumers right now, and the rates that you're offering them? How are they doing, right? We have this overall sense that the American consumer is okay, but the lower end might be having a little bit of more trouble right now.
Yeah, the last 18 months have, again, seen a lot of volatility. That volatility really has impacted that consumer. But from an firm standpoint, given the short duration of our asset, we dealt with that over a year ago. And the evidence of that is in the delinquency trends that we publish. In our last shareholder letter, we outlined the trend in delinquencies at a firm as compared to some of the credit card banks. And the credit card companies, they issue lines of credit that can create a tail effect where they're carrying around delinquencies for decisions they made 2 years ago. A firm's delinquency results are a function of decisions we make right now, and our results are really strong. We've seen really robust repayment, stable credit performance, really in line with where we need them to be in this rate environment. And demand is healthy. In the last fiscal quarter, you saw continued and high demand for experiences and travel and ticketing. And I think that's a really key part of our business. And while there are categories that are clearly not growing as quickly as they did during COVID, overall, the American consumer is still very much engaged in the economy, and we're beneficiaries of that.
And Michael, final question here about competition. There's a lot of it for a firm, Apple, PayPal, these are big names. How is a firm responding to that and positioned for that fight?
Competition is what happens when you have a secular trend like we have going on right now. Everybody is going to want to be able to participate in this. The consumers are voting with their wallets. They do not want to continue to use products that trap them in never-ending revolving credit card debt. So as a result, we know competition is going to be attracted to this problem. We think we solve the problem the best way. We have a diverse set of products that allow you to fit more transaction types. And we can do that as a business. We can actually print really strong unit economics, print strong leverage in our business, and that will suit us quite well, we think, to weather any competitive storms. And I think the lack of competition would be more alarming for us than the fact that other large players are looking at this market as a clear trend they need to participate in. And for all the investors out there, retail investors, I'd just like to remind you that we're doing a fireside chat on Thursday. So please go to investors.affirm.com if you'd like to engage, vote on a question, or submit one for me to answer on Thursday.
And that's what we call a plug, Michael Lidford. Thanks so much. Taking the opportunity there to put that in, as you should, to investors and potential investors out there. Good to see you, Michael. Thank you.
Thank you.
Well, disappointing readings on consumer confidence and new home sales have been weighing on investor sentiment today as the Dow heads for its worst single session since March. But those aren't the only drivers of the market today. Of course, Jared Blickery has a closer look at the dollar and rising rates. Jared?
Yes, Julie, we took a quick look at this yesterday, and if we can go to the Wi-Fi Interactive, I'm going to develop what I've shown is a recent phenomenon, something that's happened only within the last week that hasn't happened since last year. This is a 10-year T-note yield, and this is a long-term chart from the 1980s. What you can see is we were in a steep downtrend until basically the end of 2021 and 2022 last year. We saw that huge repricing of risk and that re-rating of bond yields higher. Now, at the same time, the US dollar, which tends to go, which is more of a mean reverting asset class, that was going down over the financial crisis. That's a global financial crisis, been trending higher ever since. But recently, it has really picked up steam. And something that's happening in the bond market is when you have these higher bond yields and concurrently lower bond prices, they're attracting foreign investors who want to get in at these higher yields. In order to do that, they need to buy US dollars. So at the same time that they're bidding on these bonds, they are driving up the price of the US dollar. And what this chart shows, which goes back to 2007, basically the beginning of the global financial crisis, is when you have a lot of overbought dollar, when you have dollars overbought, when you have yields overbought, that tends to disrupt equity prices. We didn't see a lot of this in this huge run-up from the global financial crisis, but these purple dots, which show both dollars and yields overbought, those are very present in the downdraft that we saw last year. And what's really notable is that this week, we don't have the signal yet, but we're about to get a signal that we have dollars and yields overbought once again. So my question is this a return to the prior state of 2022? I don't think so, but it may take a little bit of time, a few weeks, I would say at the minimum, in order to settle down from the hiccups that we've seen in the bond market, because there's so much embedded leverage in bonds and currencies. When that gets upset, all risk markets get upset, and that includes stock guys.
Indeed, quite a ripple effect that we are seeing today across assets.
Yes.
Thanks so much, Jared. Appreciate it. We got much more markets action coming up on this Sell-Off Tuesday. You're watching Yahoo Finance. OpenAI is reportedly seeking a valuation of up to $90 billion. That would triple its valuation from earlier this year. The company behind ChatGPT is in talks with investors about a possible share sale. All of this according to the Wall Street Journal. Joining us now, Ann Barry, Threadneedle Ventures founder, very familiar with the private markets and these types of valuations. Does this feel like a shocking number to you? I don't know, given the enthusiasm that we've been seeing around generative AI this year. It's kind of like, okay, this makes sense, I guess.
Hey, I mean, I think that's right, Julie. Am I shocked? No. Am I surprised that it's come back so soon to raise more capital, given that we just saw what feels like a short time ago earlier this year, the Microsoft infusion? The valuation uplift, I think this is roughly triple from where OpenAI last raised capital. That is assuming an enormous amount of value creation in a really short period of time. So I say, am I shocked? No. Does the air feel a little bit thin at this valuation after so short a time? Yeah, maybe.
Well, that was going to be my next question here, because obviously OpenAI is the sort of biggest and loudest player in this space right now, but it is certainly far, far from the only one in the private market. So does that suck up capital from other potential entrants, or what are you seeing in the private markets right now? Is there enough enthusiasm that we are seeing other kind of air thinning valuations, if you will?
Well, Julie, you and I have talked about private markets for a long time, and here's what I think is really interesting and different about investments into AI specifically. If you take a look at the biggest deals done in AI over, call it, the last 18 months, whether it's Anthropic yesterday being announced, the Amazon infusion, whether it was Microsoft going into OpenAI earlier this year, whether it was Salesforce, Google, NVIDIA going into Hugging Face, what have all of those things got in common? We're not hearing the names of the big traditional private market players like the big venture capital firms. We're hearing about the balance sheets of public companies, Julie. So what I think is happening right now is a level of competition with the private markets for AI that we haven't seen in quite a long time.
And speaking of private tech companies like OpenAI, listen, some of them actually made their public debuts recently. We heard from ARM and Instacart, Klaviyo. Do you think that trickle of deals could it turn into a stream and maybe even a flood here?
I don't see a flood happening, Josh, and I have quite a clear perspective on this. It was interesting. I had a conversation with the head of listings at Nasdaq in Q1, and apparently the pipeline at that point was north of 70 new deals perhaps coming to market in Q4 of this year. I don't think anything like that is going to happen. And when I look at what's the performance has been of Instacart and ARM, those stocks are flat to cuspy down relative to where they went public. And by the way, very small amount of float when those IPOs happen. So I don't see those two as the litmus test for a blossoming IPO market as we effectively now are heading right into Q4.
So let's put this all together. And, you've got publicly traded companies competing with venture capital to invest in startups. We've got maybe, the IPO market cooling back down after what was a false start. Who's the dumb money here, right? Like, if public market companies are throwing money at this stuff and venture capital is sitting back either because it's getting outbid or it's not interested, does that mean we're seeing some overpaying here?
Julie, I'm going to try and walk back the dumb money implication here, and I'm going to try and say this. One thing that's worth remembering
is more diplomatic. That's fair.
It's the Brit in me. It's the Brit in me. We're going to be diplomatic polite about it. But here's what I would say is a sort of economic nuance to that. If you think about a strategic putting money to work, different from, say, a venture capital firm, a strategic is likely to get synergies from that investment different from those that a VC firm can get. And we saw Amazon being completely explicit, like brazenly so, right, with the Anthropic deal that was announced yesterday. So Anthropic is going to use Amazon's cloud services, right? It is going to be using Amazon chips. So there's a synergy there that you're not going to see when it comes to the VC firms, because the VC firms don't have data at the same scale. They don't have chips they can offer. They don't have cloud, the capabilities they can offer. So I think, Julie, what we're seeing is strategics, I do think, are paying up, but they're expecting to see that delta in what might be the gap between their valuations and private markets, because they're looking to extract real synergies from what they're doing.
So interesting, and great to catch up with you as always. Thanks so much for your time today, Ann Barry. Well, coming up, we got the closing bell on Wall Street, and we're checking on the latest market moves and the top trending tickers. Keep it right here. There you have the closing bell on Wall Street. So let's do a quick check of the market, sponsored by Tasty Trade. Despite the visible happiness of the people up there on the podium, those who are long the market today not necessarily feeling quite as cheery. We've got the S&P 500 closing the day at a 3-month low, off by 1.5%. The Dow off by 388 points, not quite at the lows of the session, but not far off. And the Nasdaq off by more than 1.5% as well. And a lot of this having to do with higher rates that we've been seeing, pushing up towards 4.56% and causing pressure on pretty much everything. All of the groups in the S&P 500 finishing the day lower, Josh.
And now let's take a look at shares of Amazon after the e-commerce giant is hit with an antitrust lawsuit. The litigation alleging Amazon of monopolizing online marketplace services. Shares down about 4% here. Obviously, Julie, this was well telegraphed, well reported. We knew the FTC chair, Lena Khan, made a name really on Amazon. It's interesting how the street's going to ultimately see this, too. It's a long road, potentially, yes. Folks I talk to say years, right, between the complaint and the appeals. Yeah. And then even if the FTC wins, let's see it's broken up, how do investors think about that? Well, and given all of that, it's interesting that we saw the stock decline on the day by 4%, although you could argue that that's as much a function of the macro environment and this moment in time as it is this headline coming today. As you said, investors knew about it. We don't know what the outcome is going to be. It's going to take some time. So why then see the stock down 4%? Well, maybe because partly rates are at 4.56% today. We're seeing a broad sell-off in tech. Tech has really emerged as the group to be interest rate sensitive this year. And so here's another day where we're seeing that as a factor along with the FTC
Amazon
making the
headline.
headlines, but higher yields not helping.
Right, exactly. All right, let's take a look at some of the other movers we're watching. Electric vehicle makers on the move today. Fisker is one of them, anticipating a milestone pace of 300 vehicle deliveries per day in the U.S. and Europe. Also watching shares of Rivian. Those shares are higher after Bayer designated the stock a fresh pick ahead of the EV maker's deliveries report. Now, to be clear, especially in the case of Fisker, like it's still teensy tiny, eeny weeny, right? So it's just sort of a confirmation that it's actually going to be able to make some cars at all with any kind of sort of critical mass here. I should mention also, Bank of America also reinstated coverage of Fisker with a buy rating and an $8 price target.
So still bulled up there.
Yeah, I mean, but the company's, it's delivered, let's see, 900 vehicles.
Yeah.
It's, you know, it's still small.
It's a name, limited, but look at that, nice
limited
pop.
run. That's a way of making it sound.
Oh boy.
I mean,
All
they're
right.
not cheap cars. That's for sure.
And shares of Etsy closing. Let's see how Etsy did today. Some notes being passed around on the street. They were higher last time I checked. Nope, down 4% in the red. Evercore lowering its price target on the e-commerce company from 105 to 85. The analyst behind that call on Tuesday lowered its price target, but he still has an outperform on this name, which is interesting, Julie. He's still, near term, he says, listen, he's telling his clients, he does seem some challenges there. He says they expect to be range bound, but long term, he did make some survey of clients and liked what he saw there. He said, listen, according to his survey's results, they show that customers continue to like the platform, purchase frequency, usage growth, bottom line, positive consumer sentiment. So near term, pointing out some challenges why he lowers his target, but long term, they still like the name here.
Well, and even some of the challenges that he talks about, he says maybe overstated by the market. For example, he looks at the potential for competition from Temu and Shein online, the other sort of hot retailers online. And he said the negative narrative related to the impact on Etsy from these platforms may be overdone. He said consumer overlap is comparable to other industry players. In other words, there's already competition out there. It's not necessarily for Etsy, at least, that Temu and Shein bring in a lot more than what is already out in the market.
Are you an Etsy fan?
I do like Etsy.
Yeah, shop around there?
I'm not like an everyday.
A little here and there.
A little here and there. That's a good way to describe it.
All right.
You?
Team Lipton found a great bookshelf on Etsy.
Oh,
I
there
gotta
you go.
say, very nice. All right, moving on. Congress racing against the clock. The deadline for a government shutdown is now less than 5 days away. Senators will vote tonight on a continuing resolution which would keep the money flowing through government and postpone a shutdown. For now, Wisconsin Republican Senator Ron Johnson will be taking part in the vote and joins us now. Senator, thank you for joining us.
Happy to be here.
And Senator, I have to start with just today's big news, big headline, FTC and Amazon. My understanding is you did vote to confirm FTC's Lena Khan, Senator. So I'm just curious how you think about this news, what you make of this suit.
Well, first of all, I regret that vote. I think what Ms. Khan is doing is, just way of regulatory overreach. So I don't know too much specifics of this particular case, but generally I have not appreciated the nominees that this administration put forward.
What do you think? Sorry, just one more on this, and then we'll move on to shutdown, which I know is the hot topic du jour as well. What do you think that the FTC and regulatory approach should be to big tech generally? Where does it need to be reined in? Where should the FTC and other regulators be hands off?
Well, it is a difficult issue, particularly for a conservative that appreciates the private sector and wants a pretty light hand of government. I would say my biggest concern about big tech is how government interfered and used them to abridge our free speech and engage in censorship. I certainly wish big tech would use its platform positively to strengthen families, to not endanger children. I don't think they're being socially responsible, but again, I hate federal government to come in there and ride roughshod and try and overregulate the industry as well. It'd be nice if they'd behave better on their own.
And Senator, let's switch gears and talk about the shutdown. I'm seeing reports, Senator, that the Senate leadership is looking to push a bill this week that would offer a short-term reprieve on a shutdown, push debate on contentious issues like Ukraine funding into November. Is that something you would support, Senator?
I won't support this CR because we are doing the same thing over and over again. Back in 2019, when I was chairman of the Senate Homeland Security Governmental Affairs Committee, I told our committee members that I was going to pass a bill to end all government shutdowns, and I solicited their input. We actually had 3 bills to choose from. I chose the James Langford, Maggie Hassan bill because it was bipartisan. It was just very common sense. It's what we do in Wisconsin. If there's such dysfunction, You don't fund government, you don't fund a particular agency, you don't shut it down. You just continue funding it at last year's level until you do get your act together. To me, that's eminently reasonable. These showdowns are ridiculous. They cost the government money. You always end up with some measure of CR. So why not take the drama out of it and start enforcing some kind of discipline to make both chambers start passing appropriation bills one at a time, starting about May, June, July, so we're not leaving this to the very end. By the way, this is a very well-honed process. It's not like we don't have a process for mortgaging our kids' future. We have a very well-honed process, and we're seeing it play out the exact same way one more year again in a row here again.
And I think most Americans agree with you, Senator, that they're sick of seeing this happen over and over again. I have to admit, one of the things I find compelling about the bill you support is that it says you guys all have to stay in Washington and keep working till it gets done. I'm just curious, because this keeps happening over and over again, is there actually a chance that that bill is going to pass and we will see an end to this?
Well, I hope so. That's why, I started circulating a letter last Friday. I think people are somewhat timid in terms of signing on. They don't want to, upset their leadership. By the way, leadership is utterly opposed to this common sense proposal that would not only prevent this shutdown, but all future shutdowns, and it would impose some disciplines. It would prevent members from, paying out of the taxpayer funds for travel back to their home districts. It would prevent us from moving on to any other legislation. We could only recess at most 24 hours in a row. So again, it's got some discipline in there on Congress to get its act together and start passing these appropriation bills. So again, it's eminently reasonable. I would really like to hear how leadership would explain not allowing a vote on this proposal. And if we do take a vote, it'd be really interesting to listen to any member that would vote no on a bill that would prevent this and all future shutdowns. So again, that's leadership hates it. It takes some of their power away. I don't know why members don't fully support this and press leadership to take a vote on it.
Senator, I got to ask you about leadership on the House side, because there it doesn't feel like leadership on your side of the aisle is driving the bus at all, right? It seems like there are other contingents within the party that are doing so. Do you think that that is damaging to the GOP's efforts to move forward with a bill like this, or with keeping the government open for that matter?
Well, I don't envy leadership its task, particularly when you're working with a very small majority. Again, I was not particularly happy when Speaker McCarthy took the leverage that House conservatives gave him by passing an increase in the debt ceiling of $1.5 trillion, and without telling anybody, just suspended it, which will probably result in an increase in the debt ceiling of about $4 trillion. So I think that was a real breach in terms of what assurances he'd given House conservatives. So I understand why they're not particularly happy with the Speaker, and they're somewhat exercising or displaying that unhappiness with this round of a shutdown.
And so I want to get your take as well on former President Donald Trump, who's also weighed here on Truth Social, telling congressional Republicans to shut down the government unless they get everything they want in the spending bill. What is your response to former President Trump there?
Well, first of all, everybody needs to understand that the government doesn't really shut down. About 90% of it is deemed essential, so it just keeps right on operating. And of course, Congress is going to quickly step in and make sure that service members and essential personnel get paid. So again, this is really an overblown potential crisis here. But again, I want to avoid it just in general. It's really not going to do any good. It costs the government more money. What we need to do is we need to return to a process, not that we've ever really had a particularly good process, as government has just gotten to be gargantuan. But we need to be looking at each one of these departments, their appropriation bills, scrutinizing them one at a time so we actually can do some oversight on this and start trying to rein in government. But right now, government is completely out of control. This process, again, is well honed, designed to mortgage our kids' future. This can't go on. We're $33 trillion in debt. People don't realize we're spending $1.9 trillion more this year than we spent only 4 years ago. A deficit of about $1.7 trillion. We're collectively as a society, and certainly here in Washington, D.C., we're simply whistling by the graveyard. This is not sustainable. It can't go on forever, and it won't. A debt crisis would be something horrific there are a few of us who are attuned to that and are trying to do everything we can to avoid it.
And final question, Senator. President Biden, as I'm sure you saw in Michigan, showing solidarity with the UAW workers. Now, former President Trump, we know, heading to Michigan as well. Is there political opportunity there for the former president? Is there political leverage he can use maybe to win Wisconsin in 2024 after losing it in 2020?
I was asked to describe Bidenomics. I thought it was easy to define. A dollar you held at the start of the Biden administration is worth 85 cents. The war on fossil fuel is contributing to that inflation. An open border is completely out of control with the sex trafficking, the human trafficking, the drug trafficking, poisoning our cities. This Democrat governance is a disaster for America. If you were asked to design a strategy to destroy this country, you'd be hard-pressed to come up with a better plan than what the Biden administration has initiated. I think that would give any opponent of President Biden certainly enough to make a very compelling case to make sure he does not get reelected.
Wisconsin Republican Senator Ron Johnson, we appreciate your time today, sir. Thank you.
Have a great day.
And the morning team here at Yahoo Finance sat down with former Vice President and Republican presidential candidate Mike Pence as the presidential election heats up. Here's what Pence had to say on where the Republican Party stands amid issues ranging from fiscal responsibility to the role of the U.S. in aiding Ukraine in its war with Russia. Take a listen.
I really do see the Republican Party and, frankly, my former running mate really walking away from a commitment to fiscal responsibility, to reform, to the kind of steps that'll put our nation back on a path of fiscal solvency and lay a foundation for real economic growth. People deserve to know that Donald Trump is actually talking about a 10% tariff on all imports into the United States of America. I think it would be the worst possible time to impose what could be one of the largest tax increases in history. Appeasement has never worked. I know that Donald Trump and others in this Republican field are talking about ending the race. Others are questioning that we have any national interest there at all. Look, Ukraine is not our war, but freedom is our fight.
And here with more insights on his sit-down conversation with former Vice President Mike Pence, let's get to Yahoo Finance's Rick Newman. Rick, what was the big takeaway from that interview?
I like that Mike Pence calls Donald Trump his former running mate. That's a little bit of a dig at Trump, of course. Pence was the understudy. Trump was the principal, the president, but I guess Pence hopes maybe it's the other way around this time. I thought, what I heard Mike Pence say is that he's trying to differentiate himself from Donald Trump. I think, when you're vice president, you don't stand separate from the president, and that's been an issue for Pence. Of course, he did go against Donald Trump by going through his role in the certification of the 2020 election, so allowing Joe Biden to become president, obviously. But what does Mike Pence stand for other than his being Donald Trump's vice president? Well, I think he's trying to get everybody to know. We didn't even ask him about Donald Trump. We did not say, your former boss said this, what's your response? We didn't try to bait him. He brought these distinctions up on his own. So you heard him on his own say, hey, everybody needs to know that Donald Trump wants to impose this 10% tax on all imports. This is totally the wrong thing to do and totally the wrong time. It would just add to inflation. That last comment we played was about Ukraine. Trump says he wants to get the United States out of any involvement with Ukraine, that he would end the war in one day, which just basically sounds like he would cave to Vladimir Putin on his first day in office, and some other things. This whole idea of populism in the Republican Party, which is what Trump completely represents. Pence has been going around saying, we got to get grievances out of the party. And of course, who else could he be referring to but Captain Grievance, Donald Trump? I don't think this is going to work. Pence is way, way behind Donald Trump. But at least we're hearing an effort by him to establish himself as his own candidate and get completely out from Trump's shadow.
This is what I was going to ask you about. And this is a bit of a different tack for Pence as well in terms of his tone, in terms of going on the attack more against his former running mate. How is he and the other also-rans, seemingly, in the party positioning themselves going forward? Like, what is Mike Pence's plan beyond this election cycle where it looks like he doesn't have much of a chance?
Well, I think you have to consider all of the presidential candidates other than Trump to be also Rans at this point, Julie. I assume
absolutely.
you're referring to them all, right? Because they're all so far behind. And to the extent we've seen any jockeying in the so-called horse race, it's, can anybody get out of single digits in the polls, whereas Trump is 55% or something like that of Republican voters. I think, honestly, I think they're all so far behind that the main tactic is just to hope something happens to Trump and he has to drop out. Now, what could that be? I don't know. I mean, he's only facing 91 criminal counts in 4 cases. Possibly he could be convicted of a felony at some point during the 2024 election. He's 3 years younger than Biden and much heavier. There could be a health issue. So I think what all the other Republican candidates, we're going to see this in the debate again that's coming tomorrow night, the second GOP debate. I think they are all trying to establish themselves as a viable successor if Donald Trump is not there. And I suppose there are a couple like Vivek Ramaswamy maybe just want to be Trump's vice president. I don't think Mike Pence is going to be Trump's vice president again.
Rick, thank you so much for that insight as always.
See you guys.
All your markets action ahead. Stay tuned. You're watching Yahoo Finance.
out Costco reporting its numbers here today. It's fiscal fourth quarter. The company reporting earnings per share of $4.86. That is above the $4.78 estimated by analysts. Also got to check out its U.S. comparable sales ex-gas up 3.1%, ex-gas and currency effects, I should say, up 3.1% versus the 3.29% estimated on that front by analysts, and revenue for the company as well. We saw that rising to $78.94 billion, which is slightly ahead of estimates. I should say the comp sales I mentioned are U.S. comp sales specifically. Overall, globally, it's total company comp sales, including gas and currency effects, 1.1% increase versus 1.9% estimated by analysts. So the shares pulling back a smidge, a little bit in after-hours trading.
Just a bit. You wait for the conference call, see what kind of color you get.
Well, and speaking of the conference call, one of the things that we have been waiting for potentially from Costco and that analysts have flagged, when are they going to raise their membership dues again? We haven't seen a raise from Costco in quite some time. Don't see any kind of mention of that in the release. It presumably would come on the conference call beginning at 5 p.m. Eastern. We will be listening avidly to see if that is what's coming. But Costco is interesting on a number of different fronts, right? How is Costco faring in an environment where we are seeing the lower income consumers start to feel some stress? That has been benefiting the likes of Walmart, for example, in the past, as people are trading down. Higher income consumers even have been trading down to Walmart. What is happening with Costco at this moment? It's on a different cadence in terms of its reporting than the other retailers. So we'll get a little bit of extra later time, if you will. We were also talking earlier in our meeting, we just mentioned Target closing some stores in urban areas in particular because of theft. How does Costco hold up on that front? Is it more resistant to that issue?
You would think so, in part because of what you're buying at Costco, in part to get in.
Right.
That's one difference.
You have to show your membership.
Right, that's a difference. Also, when you go to Costco, you're loading up, at least the Lipton family, on 70 hot dogs.
Right.
It can make a difference when it comes to retail theft, I would think.
70 hot dogs, is that what you guys are buying?
I mean, may exaggerate.
You got your bookshelf on Etsy, you got your 70 hot dogs.
I mean, honestly, these companies should be sending me some type of check. The name dropping I'm mentioning is unbelievable.
Well, we got to talk about them anyway. It's all good.
All right, well, let's move on. Here's a look at how the market closed today. The bulls not in charge. That's a lot of red across your scene. Look at the Dow there. We're down about 1.1%. By the way, that is its worst day since March. The S&P also in the red by about 1.5%. You can see we've dipped now below that 4,300 mark, and that tech-heavy Nasdaq down about 1.6%, we're going to call it. Of course, investors dealing with a lot of different cross currents today, rate pressure with those higher yields, and we also did have some economic data to sift through today. New home sales missed expectations and consumer confidence sliding. Consumers, we know, not too surprising, what they're paying at the pump with rising energy prices and higher borrowing costs.
Yeah, and that market check sponsored by Tasty Trade as we take a look at those numbers.
All right, well, as the government shutdown deadline nears, many of those who rely on certain medical services will be wondering how it is going to affect them. We've already heard President Joe Biden warning that everything from cancer research to mental health help will be impacted if both Congress cannot reach a deal by midnight on Friday. And big initiatives such as Medicare and Medicaid will be little changed in the short term. Some smaller federal institutions will feel the immediate effects. With more on this is Dr. Zeke Emanuel, the Vice Provost of Global Initiatives at Penn University and the Chair of the Department of Medical Ethics and Health Policy. So, Dr. Emanuel, thank you for joining us. If there is a government shutdown, Dr. Emanuel, can you walk us through, even if it's just in the short term, how that is going to affect health policy and health programs in this country?
Well, about 42% of all the workers at Health and Human Services will be furloughed. That includes about 80% of the people who work at the National Institutes of Health, the NIH. That includes about 60% of the CDC and 20% of the FDA. And that, of course, is going to impact clinical research. It's going to impact the ability to monitor flu and COVID. It's going to impact the FDA's ability to oversee various parts of their mandate, including food safety. So it's going to affect us all. The payments for Medicare for seeing a doctor or going into the hospital are going to continue. But one should, the audience should not be misled. this is a huge distraction. I worked for the federal government during several shutdowns, and the problem is you take time preparing for the shutdown, then the shutdown's over and you've got to reorganize things. And during that shutdown, you can't do any work. Not a single email can you send, not a telephone call. And that leads to a huge backlog of items that you need to attend to. I'll just tell you right now, I'm trying to do some work with Medicare to try to improve how they monitor or assess and pay for patients. And, we're worried we're not going to be able to get data from them to do the analyses that we need because of this shutdown. And that'll put our project well behind and maybe savings for the government well behind. So, it affects everyone.
Yeah, likewise, we in the business news profession will not be getting some of the data that we rely on and that market participants rely on as well, Dr. Emanuel. So it sounds like that this week is really kind of a crazy week for those who are working in these facilities for the government because they're trying to pack all of this in and try to prepare for this.
Yes, they are, anticipating they'll be around for lots of votes. But I will say one thing which I find pretty disturbing. You often hear from Republicans, government should operate more like a business. There's no business that would operate like this. Where the people writing the checks, the chief financial officer would say, oh, we're going on furlough because, we can't pass a budget here, or we can't agree on a budget in the C-suite. That just wouldn't happen. And that's basically what we're having here. And it's a very small minority. I was with a Republican congressman from Ron Johnson's state, Wisconsin, this weekend. And, he was bemoaning his colleagues and the fact that they are trying to, sabotage government and the operations of the government without a plan for what to do. And, this all happens after the Republicans agreed with President Biden on a spending strategy. Well, you agreed on a spending strategy. All the president is asking for is to have that implemented. And, that's an agreed project. Is your word no good? Is legislation that you vote on not valid? It's real tragedy. And again, as I said, if you're working in the government and you're trying to help people in the government, this is a huge distraction from your regular everyday job. And as you point out, it doesn't just affect people getting health care from the government. It affects everyone, whether it's data or worrying about housing or worrying about agriculture. It's a big problem that should never happen. We can't even get a defense.
And Dr. Emanuel, just so we're clear, when we talk about the effect and the impact for the audience listening right here, a short-term shutdown, as I understand it, wouldn't impact programs like Medicare and Medicaid. Is that accurate? If the duration is brief?
Well, let's be clear. It wouldn't impact the payment to hospitals, doctors, laboratories, and others. But it will impact their ability to make improvements in the program and to run other projects that they're doing, trying to improve the way Medicare functions. We're constantly saying short term. Even a few days is a huge distraction, and I think people have to appreciate that.
Well, and even some of these people who are going to work with emergency functions aren't getting paid for the duration of the shutdown, which is something that should be noted as well. One of the other things that the government is working on in order to try to reduce its costs, separate from the shutdown, is Medicare and Medicaid price negotiations, which is something new. The government is aggressively recruiting folks to these jobs to try to do this negotiation. As somebody who has tracked healthcare policy, how big a deal is this, and how hard is this going to be? This is a big change.
It is a big change. The government has been prohibited from negotiating drug prices for Medicare since the early 2000s. And it is a major change. Now, the negotiations are going to take a few years. They don't go into effect at 2026, but it takes time to analyze the market, to make sure what a fair price is, to look at what's happening in other countries regarding prices. And the important thing is that this is the start of a process. I would say the other thing that's really important is, we always learn about how programs are working and what their effect is. And one of the important things for a brand new major program like this that's affecting over $500 billion of, basically drug prices is to really understand where we need improvements and changes to that kind of legislation. We should never think of something as important as drug price regulation as one and done. We need to think about it as, well, we're going through the process, we're learning about the process, but we're also learning about what things maybe don't work and need to be reformed. And what I'm afraid of is that, with Congress distracted talking about budgets and talking about lots of other things like, promotions in the Defense Department, which are being held up by a senator from Alabama, that they're not able to focus on, let's make this better. Again, drug price negotiation is something that 80-90% of the American public agrees to, whether they're Republicans or Democrats. It's very popular, and we've got to get it right.
Dr. Zeke Emanuel was so helpful with that insight. We really appreciate your time. You were generous with it.
Thank you. Look forward to talking to you again.
Coming up, what if your mood determined your work from home schedule? That's what the Verizon CEO does. Find out how it works. Plus, the newest way to watch the NFL next.
Welcome back to Yahoo Finance Live. Josh Schaefer here with Rick Newman and Prasi Bermanian. We're talking about some of the trending stories of the day, some stories that caught our eyes, some fun stories. And fun, let's talk about little sports, right? A little sports betting story that caught my eye today. You're going to be able to watch some NFL games now on some of these new sports betting apps that are out there. So Caesars Sportsbook and Fanatics Sportsbook, which is new this year. Fanatics, of course, the e-commerce company run by Michael Rubin, just started a sportsbook this year. They teamed up with Genius Sports, so you're going to be able to stream some NFL games on the app. The catch is you have to bet. So if you bet on the app and the game is available in your local network. So that is the key part here. The game has to be available in your local network. So we're talking about
In other words, you'd be able to watch it on TV for free.
You'd normally
anyway.
be able to watch it on TV.
You're not getting a sneak red zone
Right.
deal.
You're
here.
not getting some backdoor deal where you can watch an out-of-market game or something. But it does have a very interesting viewing experience, as you can see here. Not all of this is currently in the app yet, but essentially the pitch is going to be you can watch your bets or place bets while also watching the game. This is something that a lot of these companies have been talking about for a little while now. As a sports fan, I get it. People are into betting. I don't know if I want to watch a football game that way, though.
Let's go, Rick. You're a guest today.
I'm the special guest?
Go for it.
I mean, obviously, it's to get you to bet more, right?
Right.
I mean, not just to watch the game, but can you bet while the game is on? I don't bet on live sports.
So you can bet while the game is on, and so then
find
more
parlays and things like this.
More bets will pop up.
So there you are. You're watching, and you're like, oh, this just happened. Or how about this? I just lost $50. I got to get that back.
Right.
So I'm going to make another bet.
Right. So I think we talked about this before, and I think this is the holy grail in terms of, remember ESPN's deal with, who do they sign the deal with? ESPN?
Penn.
Penn.
Penn Entertainment.
So I think the holy grail is you're watching real TV, not some app. I want my TV, the overlay comes up. I can start betting now on the TV. I know it's like ideal viewing experience, but I think it can get you more into it. If I can just click on a button and say, I can click this real-time over right now, or whatever, Kansas City.
I think they should be doing this at bars, so you're drinking while you're watching the game and deciding to bet more. When is everybody going to run out of money because they gambled it all away?
Because they gambled it all away?
I think it's already happening.
Right, it might be.
Well,
is that why millennials can't afford a down payment on a house? Is because they gambled
Rick,
it all away on
sports?
sports?
Legalized marijuana. We have legalized betting in New York. What else do you need, right? I mean, everything is basically, the sins are all becoming like virtues.
You need a guaranteed minimum income, so everybody has money. It doesn't even have to have a job. They just have money to bet and buy weed. Bernie Sanders. This is a built-in endorsement deal for Bernie Sanders.
I think he'd be very happy.
I think there's another version of this stream, too, that'd be interesting to see if some of these books eventually get to, which would be more I love Red Zone, as you were talking about, Rick. Of course, Red Zone shows you teams that are in the red zone that are about to score a touchdown, and it's really helped with fantasy football and made fantasy football even more popular than it was. What if it only showed me my bets? Is an interesting part of where I think this could head to. So you bet on certain things. You bet on Justin Fields to score a touchdown, which, as Pross knows, he never will. But if you do bet on that, then it goes to Justin Fields when he's near the end zone, right? And it sort of gets more interactive. I think that would be very interesting personalization.
Okay, I think we need to be able to draw other factors in, such as where's Taylor Swift going to show up next? Who will she be sitting with?
How many times will she appear?
We have to be able to bet on this, right?
Yeah, no, I think you, Rick, you're onto something. I really think you are.
They're Wall Street guys trying to collateralize this right now and securitize it.
Let's go to a less interesting story.
I got something less. You know what? I wanted to talk about Joe Biden's sneakers. Joe Biden now wears sneakers all around so he doesn't fall down. But our producers are like, no, we're a serious business show. Screw Joe Biden's sneakers. No one cares. We got to talk about. I forget what my topic
Housing?
is. Oh yeah, I know. So Florida now has the second highest value of housing in the country, displaced New York. We're sitting here in New York. I say great. I mean, let Florida have it. That's actually by value. It's not by number of housing units. That's by value. And I guess that tells you that Florida is growing fast. To me, it tells me Florida has a problem, which is that housing is getting unaffordable, which it is. And I'm fine if people want to move out of New York so that housing becomes more affordable in New York. Fine with me. And I think anybody who's looking for an apartment in New York City would probably agree.
Yeah, and it's an interesting inventory story too, right? When you think about Florida and a lot of the natural disasters you've seen down there and what happens to people's houses that are on the coast, and then you want to move around, right? So you have all these people moving from the Northeast, then you also have houses being destroyed. So at some point it just makes sense, simple supply and demand of prices going up down there.
And there's another crazy phenomenon in Florida, which is insurance companies are leaving the state in droves. They don't want to be down there. And it's not because of hurricanes. It's because of this crazy situation they've got with lawsuits there. They have made some reforms recently under DeSantis, but this problem is going to persist for a while. And basically, contractors and lawyers got together to just sue all these insurance companies. The insurance companies basically have to pay a penalty if they go to court and they lose, so they just basically end up settling. So it's like the whole state of Florida has gotten a free roof. And it's all on the insurance companies.
Outside of that, my take on the story is two parts, right? One part is, you know what? You want to leave New York? Leave New York. That's fine. Make it better for people who are still here. But Florida, the hurricane angle is not insignificant. Like a lot of that property is under threat. Every year it's getting worse and worse and worse.
It is.
Water is rising there. I can't imagine the property values are going to stay that strong, 10 years from now.
Personally, I have zero interest in Florida, even as a half-time like semi-retirement place. New York is not so bad. It barely snows here anymore. Right. So we don't have winters. We just had this little tropical stormlet that came through. It rained for a few days. So what?
Be interesting to see if you see Arizona on that, like coming up that list and keep coming up that list too. It seems like that's been a little bit newer of a Florida.
It's only 150 degrees.
People keep moving there,
big
though.
deal.
People keep going on vacations there.
I know they do.
They just need more and more New Yorkers to go there and retire.
Or the Chicago to Arizona pipeline cross.
Yes,
is a very popular thing.
Yeah, we got the spring league there, spring baseball. Spring baseball? Spring
People
training.
watch that?
Speaking of my mood, I'll speak about my mood now. Do you rate your guys' mood, by the way, daily, every day, 1 to 10?
It's usually bad.
Usually bad. I'm less than a 5 today, I think. But our former employer or boss, Hans Vestberg of Verizon, said at the Fast Company Innovation Festival that every day since the year 2009, he's rated himself on a 1 to 10 scale as to whether he's happy or not, or high energy. If he's a 1 to 3, meaning low energy or unhappy, he says that he should work from home or avoid other coworkers because he's not in a good headspace, as you see there. 3 to 7 is his energized, best productive self. He can work with employees, be a good boss. And then the extreme end, which is really funny to me, too much energy. He wears people. He literally says he would wear people out because he's too energetic and asking too much of them. Hans, I got to credit you, man. It's very reflective, very sort of self-aware of himself. But maybe every day since 2009 is a bit too much. What do you guys think?
Yeah.
Oh, I think I'm a 1 or 2 every day. If that's an excuse to avoid my coworkers, no offense to anybody personally, but if 1 or 2, I'm a 2 every day. I'm like, sorry, I need to avoid you guys. I'm a 2 today. I got to stay home.
Well, I like being fake happy. I think when you walk into the office, you kind of just perform a little bit and you put a big smile on for everyone. You bring some energy. You're a young guy. Because I just think that's how that.
He's so naive.
Yeah, exactly.
So
exactly.
Today,
I walk in and I'm like, I should smile.
I woke up today. It's raining outside. I'm a 5. Right. I get stuck.
Is that good or bad for you?
It's average. I go into the subway. Hour long.
Now you're a 2.
I was a 3, 2, 2, 3. I was actually like behind to go home, go to my office, and shut the door. But yeah, should I be here today? I don't know. What do you think, Rick?
I just gave you the way out, man. If you're a 2, you shouldn't be around. You might be a danger to your coworkers. You don't want to bring the rest of us
I do
down.
think it does kind of make sense, though. Like, not necessarily always stay home, but just like when you're in some kind of mood or something, everyone does that. You just kind of go alone, right? You put your headphones on, and you're like, I probably shouldn't talk to people right now.
Hey, we're only missing one thing here. The boss can rate himself or herself, but the other people should also be able to rate the boss on a daily basis and say, you're a 2 today, go home.
An open survey.
On that note.
On Slack. It should be on Slack for everybody.
Yes.
On that note, we're going to go up. We're going to ask some people how they feel. We'll take some numbers upstairs, and maybe we'll get back to you tomorrow on that. But that's going to do it for us over here. More Yahoo Finance Live on the other side.
Costco just out a little while ago, beating estimates on the top and bottom line. Comparable sales, excluding fuel, rising 3.8% in the fourth quarter in the U.S. Here to break down the latest in the retail space, we have CFRA analyst Arun Sundaram. Arun, when we look at these Costco numbers, kind of what do you make of it writ large? It looks like some of these comp sales in particular came in below average analyst estimates.
Hey, yeah, thanks for having me. Yeah, I mean, on the top line, there usually aren't many surprises there because Costco, they release monthly sales figures. So investors kind of have a sense of where the top line will land. What's a little more unknown is on margins or profitability. But I think there were some positives and negatives in terms of margins. Gross margins did increase about 40 to 50 basis points year over year, which is a big positive. I think that shows that freight and transportation costs have come down, and also merchandise costs aren't going up as much as they used to. But on the other side, it looks like wage inflation seems to be a continued issue, and that will likely continue next fiscal year. Is the wage pressures that is going to impact Costco as well as the rest of retail.
And Arun, I know some analysts on the street are waiting for this membership fee hike. They'll point out, listen, we haven't seen one since 2017. Are you expecting that? If you are, Arun, when do you think that could come, and how much of a hike would you be expecting?
Yeah, so yeah, we've been anticipating one for a while now. It's kind of it keeps getting pushed out a little bit, further and further. Costco said it's just a matter of when, not if, they'll raise membership fees, and they're really waiting for inflation to moderate before they decide to raise fees. But now we are starting to see inflation moderate, especially in food and consumables. Inflation is coming down, and so I think we could see a membership fee increase announced by the end of this year. Costco does have the power to do so. If you look at their renewal rates in the U.S. and Canada, renewal rates are around 93%. And then worldwide, Costco's renewal rates are around 90%. So tremendous member loyalty there. And so when they do raise fees, it will likely be about $5 to $10, consistent with historical standards. That's probably going to be the case.
Arun, do you think in some ways Costco is a victim of its own success? I mean, has had sort of consistent performance here. The shares are up a little more than 20% year to date. And then if you look at sort of a small miss on comp sales, getting punished a little bit in after hours trading, is that sort of the perspective that investors should be bringing to this?
Yeah, no, I think you framed that perfectly. It's Costco over the past 3 years, really since the pandemic began, Costco's used to generating double-digit comp sales growth, and now things are just normalizing. So comp sales are moderating. We've gone from that double-digit comp sales percentage now to mid-single-digit. It'll likely be low single-digit their next fiscal year, and once that happens, there could be some margin pressure because when you're not growing the top line as much, it's hard to absorb some of those fixed costs. So this past fiscal year, comp sales grew 5.2%. That's actually the lowest growth rate since 2017. So investors are not really used to experiencing, mid-single-digit comp sales growth for Costco. Whereas compared to the rest of retail, if other big box retailers, had 5.2% comp sales growth, that would be a tremendous year. But for Costco, its standards are a little bit higher.
And Arun, bottom line, you have a hold on the name, so you're on the sidelines. What would it take, Arun, for you to move to a buy on Costco? What do you need to see?
Yeah, I mean, the real reason for our hold rating is on valuation. If you look at Costco shares, it trades at a forward PE of about 35 times, making it one of the most expensive names in our retail coverage. Apple is around 23, 24 times. Target, which has their own problems, is around 13, 14 times of a forward PE. So we really think the valuation is a little bit concerning. So we wait for a pullback on the shares before deciding whether we want to upgrade our call or not.
And we'll have to wait 8 minutes or so until the conference call to see if we get any kind of news on the membership fee change. Arun Sundaram, thank you so much. Appreciate it.
Thank you.
Coming up, it's closing time here on Yahoo Finance. We're going to recap the top stories of the day, get you set for everything you need to know tomorrow. Stay tuned.
There's always always hope, and I don't believe in a no-win scenario. Like, we understand what a shutdown means to the government, to the American people. I certainly do not want that, and so we also have some other Republicans on the more moderate side that certainly don't want that. It's an interesting situation. I hope that during this weekend we can come to some solution and come back and work it through.
The odds of a shutdown are increasing. Modern, mature governments should not be shutting down. It's certainly a crazy impact, probably an impact on the markets, an impact on the economy, an impact on all of the government operations essential to keep society humming along. And right now, the House is talking about going out for 5 days and coming back next Tuesday. And at that point, they would just have till midnight Saturday to work out a continuing resolution. So things are looking worse than they did a couple days ago.
The real problem right now is Speaker McCarthy continues to be really led around by a very far-right extreme contingent in his caucus. Look, at the end of the day, if Speaker McCarthy agrees to put up for a vote in the House the kind of bipartisan proposals that we're sending from the Senate, I'm confident that they would pass. The question is whether he will put the country before his own interests and move forward in that way.
Here's what to watch tomorrow. Following in the footsteps of President Biden today, former President Donald Trump will head to Michigan tomorrow to speak with striking UAW workers. Trump will skip the GOP debate for a second time, instead choosing to set out his new stance against the manufacturing of electric vehicles, saying they threaten the livelihoods of blue-collar workers. We'll take another journey into the metaverse as Mark Zuckerberg will be setting out his AI and augmented reality vision tomorrow at the Meta Developers Conference at 1 p.m. Eastern Time. He'll be unveiling their latest headset, the Meta Quest 3, and will showcase how they plan on bringing mixed media to life. After the bell, Micron will be reporting earnings along with Duckhorn, Jefferies Financial Group. Analysts at BMO Capital say they expect Micron to see an upturn this quarter, saying there is plenty of trajectory for its gross margins, setting a price target at $80. And CNN will be joining the Max streaming offering tomorrow. The network's parent company, Warner Brothers, is placing the network on its platform, allowing subscribers 24/7 access to the global news brand. It's following the closure of CNN Plus service last year.
And it is closing time here at Yahoo Finance. Here's a look at some of the top stories of the day, including some late-breaking ones. A judge ruling that former President Donald Trump and his company are liable for fraud in a lawsuit by the New York Attorney General's office. The ruling found that Trump made false and misleading valuations for multiple real estate assets in statements to insurers and banks over the course of years. Because of those misstatements, Trump had inflated his true net worth by billions of dollars. JP Morgan paying $75 million to settle another lawsuit over the bank's ties to Jeffrey Epstein. This deal with the U.S. Virgin Islands settles the suit that claimed JP Morgan enabled Epstein's sex trafficking crimes. In a statement, JP Morgan did not concede any liability, reiterating that it regrets any connection to Epstein. As of now, JP Morgan has agreed to a total of $365 million in settlements for keeping Epstein as a client until 2013. And UPS is detailing its holiday hiring plans. The shipping giant planning to add 100,000 seasonal workers amid the delivery rush for gifts. That's in line with the same number that it hired last year. And that'll do it for today's Yahoo Finance Live. For Josh and I, have a great night, everybody. We'll be back tomorrow at 3 p.m.